Well, those are M&M's numbers for you on your screen, and it looks like an extremely strong set, notwithstanding the decline that we've seen in the net profit as against the street's expectations, and that's because of an exceptional loss of 629 crores. If you adjust for that, the revenue and the operating performance of the company is extremely strong. In fact, the revenues of the company have grown by 41%. CNBC-TV18 was expecting a 40% jump. 21,389 was the poll on the top line. The company's reported 21,654 odd crores. Even the EBITDA, in fact, the EBITDA of M&M this time around has come in above 2,800 crores. The street was expecting a number of 2,730 odd crores, as a result of which margins have come in closer to 13%, 12.9% versus expectations of 12.7%. So on the top line, there is a beat. The EBITDA and margins, there is a mild beat, but the net profit is impacted by a 629 crore exceptional, which is why it looks optically lower than the street expectations. And as we speak, the stock too, after that initial dip on the net profit, has recovered from the lows and currently moved into the green. A strong set was expected. A strong set is what the company has delivered. The only thing we need to know is how much of that is already in the price because of the strong outperformance that we've seen on M&M itself, mildly higher.
Yes, absolutely. That's exactly the point. The stock has rallied over 80% from its March 2022 lows. So a lot of this good news is probably already factored in. Yes, the revenue has largely come in line with estimates. It's just a mild beat on the revenue front. The margin should show up for you, but like Mangla mentioned, there is an exceptional which has pulled down the profitability. Just want to point out that remember that in any case, we were expecting a very strong quarter simply because of the auto and the farm equipment business. In fact, the auto and the farm equipment business achieved their highest ever Q3 volumes. The company has indicated that they are #1 in the SUV revenue market share in Q3 of FY23, which stood at around 20.6%, and the market share in the farm business stood at around 41%. So those kind of measurables were already factored in for the street to indicate that this is going to be a strong quarter. In fact, we do have Sonia joining in to tell us more about the numbers. Sonia, it seems as though there's a bit of a profit miss.
There's a profit miss, but I think on the margin front, it's a pretty good set of numbers. So for 3 consecutive quarters, M&M was hovering anywhere between about 11 to 11.5% margins. This quarter's margin number at 13% just goes to show that, they have sort of improved their operational performance quite a bit. And, as you were also mentioning, the stock has seen a huge run-up already. Despite that, there is a follow-on buying because the operational performance is good for 2 reasons. One, of course, raw material prices have fallen. The other thing is that now they have a better product mix. So they're selling higher number of high margin tractors, and that indicates that perhaps the realizations for the company have also gone up. Now, if you look at it, the agri-business EBIT margins are at about 16.6%. They did about 16.4% last quarter. So in that context, the agri-business, which is a tractor segment, has been growing well. Remember that the rural market is now starting to recover a bit. So this is it's a good indication that the agri-business is on a improving trajectory, which the street may definitely like. Even in the auto segment, they are selling more number of SUVs. And if you look at it, the EBIT margin at 6.7% compares to 3.5% year-on-year. So they've doubled their auto segment margins on a year-on-year basis, which is very, very positive. On most fronts, I think the operational performance for M&M is looking pretty good. And also, as they launch more SUVs and even the electric vehicles, their margin performance, their blended margins are expected to improve quite a bit. In fact, most brokerages believe that the margins could be in this range of around 13 to 15% for FY24. So these are a good set of numbers, but perhaps a lot of the good news is already in the price, considering the stock has rallied so much. It's outperformed the auto index as well. No problems with the numbers, but yes, the profits are slightly below what the street was expecting because of that exceptional. Back to you.
Okay.
Okay, I think Ashwin Patil is with us. He tracks M&M very closely. Ashwin, thanks for joining in. Just a quick word, EBITDA at 2,800 crores and margins at 13%. I think, after 3-4 quarters of 11.5% margins, now Mahindra & Mahindra has moved to 13%. Do you like these numbers? And what about the stock? Is the risk-reward favorable at this price?
The auto pack already has, this is the last company within the auto pack to come out with the results, and everybody is seeing a very superb kind of margin performance, basically because of the RM cost, the input cost reduction, and the product, the mix that the company, specifically talking about Mahindra, the mix that the company has, been the launch of the products that it has come out with, the mix has improved a lot, and also the pricing has improved. And the farm equipment segment has performed well. So overall, it is firing on all the cylinders, I would say. And that has resulted into this kind of a performance. And definitely, like PAT, as we all know, that it is down because of the exceptional item. But considering the price at which the company is right now, 1370 rupees, I think, everybody may be saying that it is in the price, but still I think that, with the chip shortage out of the way almost, and the company being able to cater to the volumes and all, we can see a good volume performance as well as margin performance going forward. Definitely there is some steam left in the stock, I would say. And in FY24, maybe the farm equipment segment may not perform up to that extent, but because of the high base of FY23. But on the auto segment, the company is expected to do well with the new launches and all. So I think that there is some steam left at least, and we are going out with our buy rating as we have been always there.
Okay, so there's some steam left. And, even if you compare the results with its peer Escorts, right? Escort reported very weak set of numbers, and they said that it is the inflation situation, the delayed price hikes, which have hit their numbers this time. In comparison, M&M's margins have been quite steady in the tractor business. The EBITDA has improved as well. Their market share in the agri business is 41% now. They've gained a bit of market share. So don't you think if you compare, of course, M&M has the auto side as well, Ashwin, but is M&M sort of gaining more ground compared to its peers like Escorts? And what kind of premium would you give the stock now? You said that you're expecting a further upside, but what would your target price be? Would you raise your EPS estimates or earnings targets post these numbers?
It being the market leader in the FES segment with close to about 41-42% market share, and it is gaining because it is entering into some certain geographies where it is not that strong. But the company, the other companies like Escorts, etc., we are seeing some impact of inflation, and but Mahindra has been performing well because it is, we all know how strong it is everywhere. And overall, I think the Rabi crop has been, the output has been very good and all. I think the company is well set, and also they have come up with certain launches in the smaller segment as well. The higher segment, the higher HP segment is already there on a strong wicket. So I think that the company is well poised for a good, growth going forward. Though the farm industry may not perform that great because already it has performed well over the last 2 to 3 years. But still, this particular company, I would say that it is in a on a stronger wicket than others. And talking about the target price, etc., we were having a target close to about 1,500. But now I think with the numbers, we will obviously roll over to FY25 numbers and close to 1550 or somewhere. I mean, I am not sure. I have to work on the numbers. After that only I'll be able to give you a clear picture on the target price.
All right, thanks a lot for joining in. So in case you've joined in late, the M&M results are out and the numbers are looking pretty good on the operational front. It's a good improvement that M&M has seen revenue growth in excess of 40%. Margins have improved to 13% versus 11.7% same time last year. The auto business is doing very well. The margins have doubled there on a year-on-year basis. Of course, over there, it's a combination of lower raw material costs as well as price hikes along with a better operating leverage for M&M, and that has resulted in both auto and the tractor business doing well. The agri segment market share has risen to 41%, so it's a market, continues to be a market leader there. The profitability, you can of course complain that there is an exceptional because of which the profits were slightly lower than street estimates, but all in all, these are a good set of numbers. The stock perhaps has already seen a lot of it in the price because it's rallied substantially, but good numbers and strong operational performance from M&M. Back to you.
All right, Sonia, thanks a lot for that. So that's about M&M. With that, we're out of time on this edition of Halftime Report. You stay tuned to CNBC-TV18. Business Lunch comes up next.